What's going on, my friends? Happy hump day to you. It's 4 p.m. somewhere right here in Southern California. San Diego real estate market. Still wrong. We got a Fed rate hike today. What will the impact be on the marketplace? What's going on the ground level? I got my good buddy Bryan is in the house. What's going on, BD?
How are you doing, Derek?
Good to see you, my man.
You too.
All right. So, these Fed days are always big days. Let's do this for a second, just in case they can't see. There he is. There's my man. If you haven't seen Bryan around and all my media all these years, the memories keep popping up. All the real estate trophies. It's hard to miss. I'm trying to add a little production value here today, so I'm doing my best. But there we are. This is what obviously, the Fed hiking rates is something that's been on everyone's mind since they started doing it. Today, we reached a critical mass, my friend. Did you realize that the Fed approves this rate hike today, which takes us to the highest level in 22 years, since 2001?
Yeah.
Wild, isn't it?
Yeah. We were so low, and they had nowhere to go but up. But yeah, highest level in 22 years. It's like putting the brakes on turbo.
Well, it's the same thing, though. Like what you just said, that's the same thing that happened this time.
Mm-hmm.
There was nowhere to go. We were near zero. So it's like, okay, well, better reload the magazine if you're going to, want some bullets in the case you encounter something. That's kind of what they've been doing, and they've been getting away with it. Stock market's up, real estate's up, labor market is in great shape. It just hasn't really had a major impact on things. Really, really weird. And in fact, there was, gosh dang it, I deleted that link. I should have kept it. There was a Fannie Mae report that came out last week, and they do they do have a monthly, then they do a quarterly, and it was showing how the savings rate has increased all year. Savings rate has increased, debt rate has decreased all year for American consumers. I thought it was very interesting. People are putting away some money. Usually, like a high savings rate coincides with a little bit of economic trouble, and we haven't seen that. And so we're in this twilight zone where good news is bad news and bad news is good news, because if things are bad, then the Fed will stop this. If things are too good, then the Fed may continue to do this.
Yeah.
Did you happen to catch the testimony?
I wasn't. I was on the road all day, so I didn't get a chance. I just saw the news alert, and I'm like, yeah, that's what we expected. They paused the last time, so we figured they were going to pick it back up again. Yeah.
And here's what the reporters were trying to get our good buddy Jerry Powell to commit to some kind of answer about what everyone was feeling towards future rate hikes. And he said, hey, listen, we got a lot of data we're going to look at, and we're going to decide based on that. Like, we haven't ruled anything out. We haven't ruled out hiking more. We haven't ruled out stopping for a while. Everything's on the table moving forward. And so that sort of uncertainty, I think, was a little bit unexpected. But at the same time, they've hiked a lot. We have seen some key inflation reports look pretty good. And one of the key things that I look for on days like this, Bryan, is on mortgage bonds.
Mm-hmm.
How do mortgage bonds react? Because, you think, okay, well, if we're raising rates, that should negatively impact mortgage rates. Mortgage rates should go up.
Mm-hmm.
If the market is actually working, if it's not totally broken, the opposite will happen, because the raising of the federal funds rate is actually a deflationary action, and inflation is what really moves mortgage rates. So we did have some positive activity today, only 16 basis points to the good guys, but we're right up in the face of some significant resistance that we've been up against for months. And so to have a positive outcome today also kind of shows me that, the market might believe that inflation isn't as big of a deal. And if the market believes that, and the Fed finds that out eventually, because they're always looking at data that's 6 months old, then we could see an easing. We could see, a check down from these hikes. And that would mean that bond prices go up, mortgage rates go down, which would be good, right?
Yeah.
You think so? You'd think so. But I promise you, if you're a buyer in this marketplace and you're waiting for rates to go down, what you're waiting for is a frenzy.
Yeah.
You are waiting for Black Friday, and except you think it's cheaper, but it's not. Prices
Right.
will go up, rates will go down. That's the thing to kind of be wary of here. Now, Bryan was driving around all day today, and I'm snatching him for the few moments that he wasn't in the car. That's realtor life, right? Just driving all over creation.
Right.
But what's it like out there? I mean, what's going on? Are you working with buyers right now? Listings? What do you have? What can you tell us about current state of things?
Yeah, so most of my business is with sellers, but I look at it as if I'm working with sellers, I'm also working with buyers, because buyers are the ones who are buying my clients' homes. So I can see what the market reaction is to what's going on out there. Perfect example. I was on my way here to record with you from a client's house. A senior who's selling her home, moving into a senior living community. We put her home on the market in Chula Vista on Friday, and we have 4 offers on the property,
Okay.
all over asking price. All 4 buyers fully qualified, fully vetted, and they just want to get into their first home. And so we're not seeing a slowdown in activity now.
What's the price point
Maybe
on that, Bryan?
So we were listed for $699, and we're
Okay.
in escrow above that. All 4 offers came in above that, so it's a great price point
It
for
is.
sure.
Is it detached?
It's a detached home,
Okay.
3 bed, two and a half bath, single level. So it's kind of what a lot of people are looking for in their first home.
Is it Old Chula, like West Chula?
Yeah, West Chula Vista. Others on the west side of 805. It's actually really close to a ball field, which is kind of cool. It reminds me of when my son, as you know, used to play ball.
Yeah.
So great neighborhood, real close to schools, and we had a lot of activity at the place. And what's good to see is when activity translates into offers. If you
Mm-hmm.
get a lot of activity but no offers, it's either a sign of the price or of the times. If people are nervous to pull the trigger, people are not nervous to pull the trigger right now. They're wanting to get in, and I think you're right to your point of if rates came down, then you might have more buyers out there for the few homes that are for sale. And we're not seeing a flood of inventory coming on the market, nor do I think we would if rates came down.
I think if rates come down, that's our only hope is that would-be sell buyers finally go, okay, we'll sell. We'll do it now
Right.
because we have 2.75. I talk to people so much that have 2-something%, 3-something%, and they want to do one of 2 things. They want to sell by, and I give them a quote for the new, the move up home,
Mm-hmm. Yeah.
and it's just so daunting in comparison to what they have that it sort of freezes them. Or if they're looking to tap equity, it's like a refinance is pretty ugly, and HELOC is maybe not quite as ugly,
Right.
but both are tough for accessing equity. Selling your home is definitely the fastest and most efficient way to access equity. But what are you going to do after that?
Mm-hmm.
Are you going to live in an RV? Are you what are you going to do? Seriously, there's people that are doing that right now.
Yeah.
Or bouncing around from Airbnb to Airbnb. There's a lot of different things that you could do, but what's going to be better than owning that home? By the way, that a West Chula location like that, detached under 700, I can understand. That's still it's been on my radar. So I called that one in 2019, West Chula, as my number 1 favorite place to invest in San Diego real estate.
Hmm.
And obviously, what's going on over there. They're putting a couple $1 billion
Yeah.
into the waterfront down there. And that West Chula setup is just it's different. That like East Lake is great. East Lake's terrific. I love it. It's beautiful. Schools are amazing, but it's expensive. It's new construction stuff. It's Melrose. It's heavy HOAs. You got a lot that comes with that. But for a lot of people, they prefer the more old school setup with not as many townhomes, more detached yard, no Melrose, no HOAs. You get that in West Chula. And proximity to highways and to the water, and now to entertainment and a whole bunch of stuff that's going in over there. I think it's going to be really so. Whoever bought that home, you're going to be smiling. You're going to be smiling in the long run. I believe that. So okay, so yeah, we're seeing offers. I think where the disconnect is for your side, be as a seller's agent, the thing that you don't see that I see from buy side is the number of people who begin the engagement and then fall off. Whether it's like, hey, what are rates? Oh, that's what rates are. What does a payment on this much look like? Wow, okay, definitely going to wait.
Yeah.
So there's a lot of people waiting in the wings for lower rates. That I can tell you. Pent up demand is real. It's there. And all it does is just push things to the right. It pushes things to the right. So people are waiting. When rates come down, we'll see that. So we have to hope that when rates come down, we get some of those sell buyers and we get some more inventory on the market, just so that it doesn't become COVID again. So we don't go through that absolute insanity again. I don't know if we'll be able to avoid it, though. Here's one B. So home prices continue to climb with striking regional differences, says Kay Schiller. This came out one day after Robert Schiller said that he believes the housing bull market is coming to an end. Right. Now, did you see that one?
Yeah.
Okay. So he said he believes that the housing bull run is coming to an end because he thinks that rates are going to stop going up. And his thought was, while rates are going up, it motivates people because they want to get in before rates get worse.
Mm-hmm.
Now, while that may be the case with a minority, I would say, of people, I think the vast majority of people, it's a turnoff to them.
Right.
They just feel like, well, we missed it.
Yeah.
We're too late, and we need to wait. That's what, in my opinion, that's what I tend to see on the front end. So the early stages of getting pre-approval, having a phone conversation before pre-approval, that's what I see. And so while there may still be motivated buyers out there who are looking at rates right now, just going, hey, so what? We can still get a house for a price that we feel is reasonable. We'll refinance when rates come down. I think those are few and further between. What are your thoughts on that?
Yeah, no, I agree with you. I think you're spot on. And the other thing too is, all these, the prognosticators, they're all, looking nationally, and
True.
San Diego, we are, I hate to use the word bubble because then people think, oh, we're in a housing bubble. No, not that kind of bubble. We have like a bubble around us. We're the place where people want to move to, where there are great jobs and the weather, now that it's finally nice out. And so, we're a little bit isolated in some ways from other areas that might be more susceptible to some of those shifts, but we still have people moving here. I'm still talking to people who are moving here, moving back here, who moved away and realized, yeah, Colorado wasn't what I thought it was going to be, or Florida has too many big bugs and, that kind of stuff. They want to be back here in the sunshine. So sunshine without humidity and bugs. And so we're still pretty robust here, and the demand is still super strong. They're just not building enough. So I don't think that we're in a situation, where this steam is going to run out anytime soon.
Thank you so much for pointing that out, because that's an important distinction to make. San Diego is its own marketplace. Now, you can back me up on this because I know you heard me say this 10 plus years ago.
And I know what you're going to say. Go ahead.
You know what I'm going to say.
Yeah.
San Francisco, Los Angeles, Vancouver, all the Washington, Seattle, all these West Coast marketplaces where we've been looking at price per square foot, we've been analyzing for years and years and years, going back to the radio days, television. We've been looking at these markets, and for how many years have I been saying, of all these markets, the best place to live is San Diego. That's the best place to live. Now, people would argue with me and they would say, well, but you can make more money in the Bay Area. Average salaries are higher in Los Angeles. So, okay, so be it. I'm not going to argue that. It is true. It is what it is. I'm not talking about that. Right. I'm talking about what's the best place to live. Bryan, what are the 3 rules of real estate?
I think they're all location, and maybe location.
Yes, sir. So when we talk about, where is the real estate that you want to own? Zoom it out a little bit. Even if you're not an investor, zoom it out a little bit and go, where I'm going to buy a piece of ground with a dwelling on it. Where do I want that to be? You want that to be in the best place to live, because that's what the purpose of your real estate is. And so, and for a long time there, it was like 2.5x price per square foot in San Francisco versus San Diego. And I called that out and said that right there is a divergence that will come back to earth at some point. And I don't know if you've been there lately, but San Francisco, if you thought it was grungy, if you thought it was just like, I don't know, for dirty hippies, it's gotten so much worse.
Really?
So much worse. Frightening, actually. And so these things are playing out. Los Angeles, LA is LA, insane traffic, madness, and it's dramatically more. There's lots of opportunity in LA. Don't get me wrong. Like, there's people hustling up there who love all that stuff. It's just not for me. If you want a more chill spot, where you'll probably live longer and have less stress, then I think San Diego's the place. So I'm going to stay by that. I've been all over the world. I haven't found any place that I've been more excited to come home to or to visit ever. The closest one was Barcelona, and I'm telling you, it's about twice as expensive to live in Barcelona, more than twice as expensive than it is in San Diego. So when people tell me prices can't go much higher, people can't afford it. They just can't, because people can't afford it. What you don't understand is that the work from home economy is going to bring the wealthy people to the best place to live. And we're just starting to see the beginnings of that. Have you noticed that at all, Bryan, with the buyers of your listings? How many of those people from out of town?
No, it's both. Actually, when the pandemic began, a lot of it was people out of the area, moving here. Seeing a lot of people from here who are buying. But what's still crazy to me is the number of people who are paying cash for homes. And I'm not talking 500, 600, 700,000. I'm talking $2, $3, $4 million that people are plunking down with cash. So I've always talked about affordability being the biggest problem, because you can't. It makes it so that a teacher can't teach near the school where she works, or a police officer cannot live where he works. And that's a problem, I think, in my own personal opinion, when people who take care of us and serve the community can't. But what's happening is people are plopping down cash. That's what's one of the things that's keeping prices up. But affordability is not an issue for someone who's paying cash. They want to put their money somewhere. Where are they going to put it? Something safe that's not going to go away, and that's real estate. And so affordability, whereas I've always thought it is a problem, and it is inherently, it's not preventing people from buying here.
It's always been an affordability issue, though. Talk to some of the people, some of these seniors you're helping transition into these communities. I wonder, does it ever come up? You ask them, hey, what'd you buy this place for? When did you buy it? I bought it in 1971 for $34,000, and people thought we were crazy.
Right.
They were like, what?
And they were staying up at night trying to think how they're going to pay the mortgage.
Yeah, right.
I met with a client who bought a place $100 down and $100 a month. Think about that. You can't buy a car. You can't barely buy a lawnmower for that anymore. So,
but the real interesting thing, though, is how much money was that for the time?
Yeah.
And that's the thing that throws you off, because I used to talk to my neighbors when I lived in Del Mar, the ones who've been there forever. And they were like, yeah, we bought this house, this ocean view home west of the 101 for $400,000 in 1982, which was an insane amount of money,
right,
in 1982. And they would say, yeah, people thought we were crazy. It was just insane. And no house in the world would ever cost that much.
Right.
Those houses have 10x'd since then. So it's always, affordability is always going to be an issue with real estate. I think it's not, unless we have a significant depopulation event, or Elon Musk makes robots that can build houses on cliffs, at night while we all sleep, or something changes in the supply-demand equation. Something would have to significantly change there, because supply is more and more difficult to create. and more expensive to create it. Mm-hmm. And the demand continues to grow regardless of if we have a flattening population. In other words, if as many people being born as there are dying, and so we're just kind of have a flat population, household formation is still increasing.
Mm-hmm.
Yeah. And so we've got a problem there. We have an imbalance that is getting itself worked out in the market. So I agree with you that I think the sort of the free market aspect of what's going on with police officers, firefighters, teachers right now, there's a macro free market principle that's at play here. And that is that there's a lot of people who want to be police officers. There's a lot of people who want to be firefighters. There's a lot of people who want to be teachers. And so those people aren't really negotiating their salary, right? They're going through training. They're doing all these things. And then they're showing up and saying, hey, I want the job. How much does it pay? It's not, well, I'll do the job if you pay me this much, because there's someone behind you who will take that. And so these institutions are having that trouble. If you look at some of the places where they've had trouble hiring police officers, what do they start doing? They start offering bonuses, one-time bonuses. Then they start offering better salaries and stuff. And so this, the supply demand elements of that are going to take a little time to play out, I think, and it could be 10 or 20 years. I mean, it could be a very long time. So unfortunately, we're going to have underpaid teachers and underpaid police officers for the next decade or two.
Right.
As wrong as that is, that's the way it's going to be.
Well, especially since the money for their salaries comes from the local cities and stuff. And so you got government, at play, which, it always throws a wrench into things.
Yes, sir. It sure does. Or, something similar anyway.
There you go.
So, let's take. So this was the one that I would say. So 10-year rally in U.S. home prices could be coming to an end, says Schiller. He said, here's the reason why. Let's see if we can. There we go. Fear of interest rate increases has influenced people's thinking. It's not just the homeowners. It's the new buyers who wanted to get in before the interest rates went up even more. That's his reasoning. That's his logic for why the bull run in real estate is over. Nothing about supply. Nothing about pent-up demand. I don't know, Mr. Sir.
Mm-hmm.
We'll pay attention to your index, but we'll leave your comments to the side for now. You're not making sense.
There you go.
Here's an interesting one. I thought you would find this one really interesting. I was just talking about Barcelona. More Americans are moving to Spain than any other place. Number of expat Americans living in Spain grew 13% in the last couple of years.
Wow.
And they're paying higher prices for real estate. We were just talking about this. And Spain is a beautiful place. And Barcelona is the closest thing I've seen to San Diego out there. And it's a beautiful place. It really, really is. Doesn't really hold a candle to here, though. And it's at least twice as expensive. I don't know about like the difference between, income taxes there and here and all that stuff. But I thought this was really interesting that, people, expats to me it's just interesting all around. I'm very curious about people who get to retirement and then say, peace to the USA. Like, isn't that weird?
They want to get out. They want to get the free health insurance. They want to cash out, but you have to look at the total picture. It's not, you can't just go and say, I'm going to go there for the free health care or whatever. If they're paying high prices for real estate, that washes all that out.
Yeah. Yeah. When I was in Thailand, I met an expat there who was like, oh yeah. He's like, I moved out here. He's like, you can live here on $300 or $400 a month. I'm like, yeah, but what happens if you get in a car accident and your leg's broken?
Yeah.
Then what?
Mm-hmm.
And it's just, every place is different. A lot of people go into Costa Rica.
I have a client who just closed escrow yesterday and is moving to Costa Rica.
No way.
Yep.
Did they give you a reason why?
He's got a friend there.
Okay.
Unfortunately, he has cancer, and so he's not sure how much longer his life is going to be, and he wants a slower, sort of easier life in retirement.
Okay.
He says it's beautiful there. The medical system is actually pretty good, he said. So, yeah, that's why he's going.
Okay. All right. Yeah, I can't argue with that, man. Island time. When it's about to be your time, island time, I get that. I get that for sure. Okay. So here's one that's interesting. So this one is talking about specifically expanding who can offer down payment assistance funds. and things like that. Now, I have to tell you, down payments, and so they're talking about for FHA, hey, they're going to essentially create down payment assistance programs for FHA. By the way, this has been going on for a long, long time. So there's multiple people lately who've been posting this as news, like other lenders, and then like some people are sharing it and stuff like that. Like, oh, we've got this FHA backed down payment assistance program. Just so everybody knows, this stuff's been going on for a very long time. There's private FHA down payment assistance programs. There's down payment assistance programs through CalHFA or CalHFA, using FHA underwriting and FHA, the building blocks of FHA, the frame of FHA, if you will, so FHA underwriting guidelines and PMI guidelines and all that stuff. So this stuff has already been around for a long time. So I don't know why this is hit as some new thing. And by the way, we're not in a position in the market where it's like we really need more buyers. They keep focusing on that. I think this is a macro problem. Like if people who are supposed to try to find solutions for the market literally have no idea how it works. And this is the proof. This is what they're spending time on. Well, how can we help buyers? Mm-hmm. How can we help buyers pay higher prices? That doesn't help.
Right.
That doesn't help prices for buyers.
Yeah.
That's not how to do it.
No.
You should be focusing on the opposite. An incentive for sellers. Maybe an expanded tax credit or something like that.
Yeah.
For, hey, if you sell your home before the end of 2024, you get an additional tax credit, or all of your capital gains can be federally forgiven. Or something that would make sellers go, you know what? Okay, hey, we're up a lot. It's time to go to Arizona. It's time to move up. It's time to move down. We got to take advantage of this. That is how you help buyers.
Right.
And they just keep doing the wrong things, man.
You got to get more inventory in the market. In California, they passed, Prop 19 to try to get more movement, enticing people to sell, and they can take their property tax base with them if they, buy something else. That might bring up some more inventory, except the problem is it's the same problem as the move-up buyers. I'm going to sell my home and buy what? I'm not going to buy something for more money that, is something I don't want. And so they're staying in their home, which may not be the right home for them in the short term or long term anyway. So yeah, we need some incentives, I think, or at least present to sellers what their different options are and have them consider some other opportunities that might make sense for them to want to sell that they're not aware of.
You make an amazing point here. I'm gonna see if I can quickly pull something up. If I can't, it is what it is. But it's what the Prop 19 actually works. That is something where 100% I talk to people who are eligible for that, and they go, "Hey, I heard something about I can transfer my tax base if we buy. How does that work? What are the moving parts? What's the process?" And you do have to purchase the home and be able to qualify for the full tax amount, because you can't apply for the transfer of tax base until you own the new home and you've gotten and sold the old one.
Right.
But it's still it's something that allows people in that position to say, okay, well, I don't have to take a bath on tax.
Yeah.
Like that's really, really, really helpful. So I do believe that's something that is helpful, that works. Oh my gosh. Look at this. Who is this guy? If you guys have not checked this out yet, Bryan is doing a Monday market moment every Monday. Quick video, 5 to 10 minutes, and just going through the San Diego market highlights. So check that out. I'll put this link to his channel in the description. But I mean, we need more things that are benefits for sellers. I know it sounds terrible, and if you don't understand how the market works, you might think like, what are you talking about? Why are you talking about doing stuff to benefit sellers? Sellers are already crushing it. They are
only for sellers
enough.
Right.
We need more of them to capitulate. Mm-hmm. And if we were able to do that and incentivize that properly, I think we could get the market balanced pretty quickly. Here's something that it just continues to sort of come up. And by the way, this Black Knight link, if you want real estate data, this is a great place to get it. but essentially our national delinquency rate right now is really, really close to the lowest it's ever been. Let me see if I can. Oh, it's the wrong way. That's just tough to see it. But essentially, people are paying their mortgages. Now, there's a couple things. So, serious delinquencies are 90 plus days. That's dropped big time. Early stage delinquencies, 30 days. That increased a little bit. Foreclosure starts increased slightly. These are at very, very, very low levels, extremely low levels. Foreclosure was started 5.8 of serious delinquencies in June, which was up from 5.1% in May. And what this is doing is basically just showing us like what is happening on the actual capitulation side of real estate. And one of the things that I've been talking about for a long time, when people were telling me the market was going to crash, okay, this happened twice recently. Number one, COVID. When that happened, people told me the market would crash, absolutely crash. And I thought, you know what, maybe they're right, that this is the Black Plague. Maybe we are going to have a real estate market crash. I sat back for a couple of weeks to see what would happen, and it looked bad for a couple of weeks. But then after that, giddy up, right?
Yeah.
And then the second time was here recently when rates went up. Everyone believed that we were on the doorstep of a major recession. There was going to be huge issues. And people were saying, this is going to happen. We're going to see a crash. The main reason that I was on the other side of that saying, no, we're not going to crash. We might see a correction. We could see a correction, which we have, but we're not going to see a crash, is because banks have fixed the foreclosure process. So now, as long as you communicate with your bank, you say, hey, I can't make the mortgage payment this month. They'll say, that's no problem. Here's what we'll do. We'll put you on forbearance.
Mm-hmm.
And they'll give you as much time as you need. Now, they're going to be adding your payments to the back of your loan. It's not something you want to do. It's not financially efficient. But if you are in a situation where you've lost a job or whatever, and you've had this financial impact or you can't make your payment anymore, you don't have to just say, well, we got 4 months. We'll have to get out of here.
Right.
That's not how it works. And the banks, in fact, perpetuated the crash in 2008 because they dumped inventory onto the marketplace, devaluing their own assets. One of the dumbest things that we've collectively seen in the financial world. Possibly the dumbest thing we've ever seen, particularly the banks do. The banks are all about the Benjamins. So to watch them devalue their own assets like that, Bryan, was one of the weirdest things. Do you remember that time frame in the marketplace and what it was like?
Oh, yeah. And I remember when it first started happening and borrowers would go to the banks and say, can you do anything? Nope. Can't do anything. We'll just take the house back. And they were like ready, willing, and able to take the keys back. And they were taking them back en masse. And then they realized, this is a problem. And then and only then did they start bringing back the short sale process in order for them to lose less money. But it was still, that was a nightmare. Talk about red tape to get through. You had to give your left, you give your kidney and your left lung to try to get a short sale done. They made it so impossible, but it kept perpetuating that problem like you're talking about. And they flooded the market with these distressed properties and not enough buyers out there because guess what? We were in a bad recession. People didn't have jobs to buy them. It was a nutcase situation for sure.
Yeah. And they finally came up with loan modification. And that took three and a half years for them to finally come up and say, okay, we're going to start doing something called loan modifications. We're going to modify your loan, which is essentially what forbearance is today. Loan modifications were the infancy stage of trying to figure out how to mitigate losses. Banks had never really, they weren't prepared at all for that delinquency rate. And then there's, handbooks, their employee handbooks that said, well, when people miss their payments, we do this. And then if it's been this long, we do this. And then we foreclose. And that's what we do. And they had never thought, well, we don't do that if we have 14,000 of these on the books.
Right.
We only do it if we have up to 1,000. And then past that, we got to talk to somebody about some other option.
Yeah.
There was no fail-safe. There was no governor on that. And so they just flooded the market with inventory. And that's why we saw the crash. That will not happen again. Not in our lifetime. If that happens again, it'll have to be 100 years from now when people have completely forgotten about this, gotten away from the practices of loss mitigation, which are really enshrined in the big banks, the big servicers playbook now because of what happened in 08. It was a learning moment. It was a teaching moment for them. So people keep thinking it's easy for a crash like that to happen. I'm telling you, it's not. You have to have a situation where you have people who think the market can't crash as a whole. The sentiment is that the market can't crash. Real estate's invincible. Buy real estate, go up. Take your money out. Buy more real estate, go up. Take your money out. Everyone believed that. I heard people say free money way too many times. That was all just a red flag, for the situation, which still would have been fine if it hadn't been for major ratings agency fraud on the paper that was being created by Wall Street, the garbage paper, negative loans, all that stuff. If the ratings agencies hadn't committed fraud, we would have never had all this inventory in the first place. We would have had all of these delinquencies and, all of this bad paper in the first place. And then you also had the banks who didn't know how to deal with it and did the exact wrong thing. So many big, huge pieces went in the exact right place to create that crash. And the chances of that happening again is very, very slim, if not impossible for it to take place. So the reason why I look at these statistics and why I bring them up, and particularly looking at the delinquency rate, is because I want to see if it ever becomes the case where the banks break on this, where there's a market structure shift of some sort, and the banks change their tune about how they're doing things, or they start to let go of some of these loss mitigation policies that are in place. We have not seen that. If anything, we have seen them go further and further in the proper direction for a healthy real estate market, which is to not just immediately, nail people or foreclose on them or put the screws to them, but to actually go, hey, cool. How can we help? How can we make this easy for you to make your payments to us eventually? And how do we profit from that? Don't be mad at the banks for that. Bankers going to bank.
Mm-hmm.
Okay. Yeah. They see it's an opportunity, and it is. If they take your payment, which includes interest, and they stick it on the back of your loan, you're going to pay interest on your interest. That's banking 101.
Yeah.
How can I get you to pay interest on your interest? Oh, they love it. Love it. But if it gets you out of a jam and you have no other option, then it's good for you too. So there's a possible win-win in all this. So that's the big thing for me, brother. What was your favorite thing from this week's show, Monday Market Moment?
Well, looking at the numbers and kind of where they're at, they're things are going in different directions. You have market times going down, you have prices going up. Inventory is still, way down. Demand is ebbing a little bit, but not because of rates going up or anything. It's just traditional seasonality. I think we're seeing a lot more seasonality in the market now. If you look back over the last few years, not really the last couple because they've been wonky, but if you look at, before COVID, and what the trends usually are, inventory starts kind of coming down a little bit, demand starts coming down a little bit, and that's what we've been seeing. But the lines are much lower than they have been. So even though we're following the normal trend lines, our demand is way down, our inventory is way down. You can kind of see where the blue is over the last couple of months. What inventory is, it has gone up. We have seen somewhat of an increase in inventory week after week after week, but not by a ton. And then the orange lines being the demand. We did see a couple months ago a smaller delta between inventory and demand than we are right now. So we are seeing a little bit of a widening of the gap, and we'll watch that to see over the next month or two if rates go up or they go down and what that's going to look like.
Yeah, that's a good point. I mean, if we look at rates here, it's going to be really tough to see, so I'll read them off. But basically, you're in the sixes across the board. FHA, VA in the low sixes, and conventional in the mid to high sixes, low sevens if you have a condo or a high balance situation or something, and then jumbo arms still in the low sixes. So it's we're in the sixes, and the sixes are what they are. It's not where people want rates to be, but it's setting up a couple of things, Brian. It's setting up, and this is the mortgage bond chart here that we're looking at. where we want to see those prices going up. Mortgage bond prices go higher, rates will go lower. And you just see they're just sort of trickling lower here. We just kind of have this downward trend going. But what this is setting up for is two things. Number one, a boom on the purchase side. If we see it when rates drop, when we get to 5 something percent, people are going to think it's low, right? Because we've now re-engineered what most people think is a good rate. Like if I told any of my buyers today, hey, we got you locked at 5.99, they'd all be like, what?
Yeah.
They throw a party. So the understanding of what rates should be has shifted because of this. And so as rates trickle lower, there's lots of opportunity to create more demand will hit the market. Hopefully we have supply. Otherwise, prices are going to go nuts. It's also setting up a huge refi boom too for people who are in those situations where they got a 6 or 7% last year or this year. Well, a year or two from now, they won't hesitate to sell and buy. You know, if their home has gone up in value and they bought it with a 6.5% and rates are 4.5%, they won't think twice.
Yeah,
they'll actually sit there and go, you know, should we refi or do we just want to, we want to move up? So they won't hesitate. So it's creating a lot of potential coming down the pike here in the next 1, 2, 3 years where we're going to see some really strong activity. And so the question is, what do you do in this time when the activity isn't as crazy? You know, you talked about your most recent listing, you got 4 offers above asking. So in a lot of markets, people would say that is crazy.
Yeah.
Like, you have 4 people who just came in above asking without like a negotiation. That's where they started. And yeah, that is where it is, but it's not 25 or 30.
Right.
And that's what it could be. I mean, that's what it was when we went through, that rate drop cycle during the COVID era. So we very well could see that again. So what do you do in times like these right here? And I think that now is the time for people to be really looking at and trying to pick up opportunities to get a good place at a good price, knowing that you may not be able to get the rate that you want today. But if you can get the price you want, the price is permanent. I can fix the rate for you down the road when rates go lower, assuming they go lower as they should. I can't fix the price for you though, B. Whatever you buy it for, you're stuck with it.
That's right. And if you're going to be living somewhere, and you want to start building some equity into something, real estate's a pretty good place to start building it.
I mean, as far as what we've seen, just over the course of time, real estate goes up and to the right. That's just what it does. And all of the really easy places to build in have already been built in. So now it's very complicated, especially here in San Diego. I mean, if you look at how landlocked we are, practically, we should just call it, instead of a bubble, Bryan, since there's a negative connotation with that. Yeah. We're on an island.
Yeah.
San Diego's its own little island of real estate.
It really is.
And we have our personal Catalina, would be like Alpine or, one of those places that's it's out there, but it's still San Diego County. I mean, even Alpine, Lakeside, all these places are doing extremely well. That we used to say, oh, they're really far out. I'm old enough to remember when we used to say Carlsbad was right there. Do you remember those days?
Yeah, I remember. We used to talk about that. It's like, Carlsbad? You live where in Carlsbad?
Carlsbad? Do you fly a plane to get here? They have an airport up there, don't they?
Exactly. Not like that anymore.
No, Carlsbad's amazing. People are loving Oceanside, and understandably so. I mean, Oceanside, they're doing a lot of good things in Oceanside, but everything that happens that's good in Oceanside is trickle benefit for Carlsbad, right? Because Carlsbad is in a more premium location, just is. So if Oceanside is blowing up, Carlsbad is going to be blowing up as much or more. And I think they have fed each other for sure. But yeah, Carlsbad is a premium location now. And I remember distinctly people being embarrassed to tell me that they lived in Carlsbad.
Yeah.
Embarrassed. If those people had just thought about pulling the trigger on some real estate back then when they were so ashamed, who knows what they could have gotten and what it'd be worth today. But okay, my friend, I know you're a selling specialist, senior specialist. I want to get a tip or two from you here before we wrap things up, do you have like best practices, a strong tip for sellers in this market that we can get out of you?
Yeah, it's still, for all of this, it's still important to price correctly. If we had priced that home at 775, we probably wouldn't have that much activity. Certainly wouldn't have the offers, and yet we're winding up around the same price than we could have, if we had done that, but in a different market. So I still tell sellers, price it correctly. Right now, half the homes that go into escrow do so within 2 weeks or less. And those are the ones that have no price reductions. I've even seen them with price increases. The ones that take longer than 2 weeks, they usually have one price reduction or more, and they've been taking longer. So it's still critical to price it properly. And it's still important to have it present itself the best way possible, because people are really clawing and scratching to get in with their down payments and so forth. They don't have a whole lot of money left over to be doing massive upgrades. So you have a good product at a good price, it's going to go.
Yeah. What do you think about, like, I just have a question for you about like a specific situation. So let's say you have a home to sell that you might look at and go, you could sell this to, an investor, but we could probably put it on the market. So we know one of the reasons why you want to present it properly is because people look at the photos first and they can become disinterested. Mm-hmm. There's homes in the past I've shown my wife, and she immediately is like, absolutely not. Like, we're not even looking at that.
Yeah.
And I'm like, are you sure you don't even want to look at it, even if we're over near there?
And we're driving right by it.
We're going to be within a block of it. You still don't want to go look. But I pay attention to those things because I'm like, she doesn't know anything about real estate. And so and I want to see what her reaction to the picture, just like, nope. So people think that if you have one of those, is it ever recommended to maybe put less photos, like maybe just a curb appeal shot, let people come make their own conclusions, describe it properly, you know, hey, needs TLC, fixer, whatever, but maybe just put one, nice photo on there or less photos, so that you can kind of let people come see it and see the demand and get in there. Is something like that a reasonable strategy?
Yeah, no, for sure. I mean, 90-something% of people are starting online and they're looking that way. And they're not even waiting for their agent to show them the house. They're going to see it online. They're going to make a decision if they're going to go look at it or not. And if it's the nuts and bolts of, if that's correct, bedrooms, bathroom count, square footage, location, all those things, check. And they see, pictures that turn them off, they'll be out next. Even though there's not much inventory, they'll still wait. But if they see a nice curb appeal type picture and you do describe it properly, they'll come in and see for themselves. They'll make their own judgment. But by the time they go there and they see the area and they see the neighborhood, they're starting to get sold on it. They're going to more likely than not talk themselves into it versus talk themselves out of it. If they saw a bunch of pictures, it's easy to say no online. It's harder to do that when you start getting emotionally into the home.
Yeah, or you get to see some of the finer points first, as opposed to like, let's just go ahead and rifle and just put it right in your face, the things that we're deficient with on this home. I think especially for these detached homes that are the right price, that's definitely a good strategy. So, Mr. DeVore, I want to thank you so much.
All we want to do is pump you up.
That's what we're here to do. We're just trying to hook people up, pump people up. Really appreciate your time, my friend. I will put the link to his YouTube channel below. If you have questions about selling a home, give him a shout for sure. And of course, we'll see you again next time. Let's see. We're trying to do a professional production here today. At least some elements. We'll get some closing music. Mr. DeVore, appreciate your time, my friend.
My pleasure as always.
And hey, let's share this video with your friends. Help make them more than everyone else. Have a great night, my friends. One more button.